Good morning. Welcome to another episode of Around the Grounds. How is everyone?
Morning, team. Yeah, good. All good down here in Brisbane.
Yeah.
Pretty good. Interesting day. It's actually Friday the 13th today.
No, it is too.
Yeah. That's 2 Friday the 13th in a row.
Don't know if this is going to be the lucky one or the unlucky one.
It's all right. We got a deal done today, so that's all right. Lucky Friday.
How good. It's a lucky one.
Lucky one.
Always like.
It's been an interesting week. We've done a couple of deals, but we've also seen petrol prices go up through the roof. Lots happening around the place. Up here, they've gone up from $1.90 to $2.60 today.
Yeah. I filled up last week diesel for $1.78 down here in New South Wales. And same $2.60 today. Incredible. Almost double.
It's the first time I can remember Sunshine Coast petrol being more expensive than Brisbane, which has always been very weird to me. I would drive up to the Sunshine Coast and it would get cheaper as I got further away from Brisbane. Had a road trip to Gympie this week for a client, and I noticed on the way up that even the really cheap ones were $2.50, $2.60. I went, wow, okay, it's a bit different. I was just watching the money accumulate as I was driving, just basically disappear out of my account. It's the highest it's been for a long time.
For sure.
I hear that.
It's probably not going to stop anytime soon either.
No.
You're probably right there. It's interesting times for sure.
Yeah. I was talking to a friend of mine who works in the petrol industry, and they were saying that the issue at the moment actually isn't related to supply from overseas. It's the panic buying, and they're just not able to resupply a lot of these service stations in time. So there is enough, but no one was expecting people to go out and stock up, I guess, on fuel.
Yeah.
So, but if the situation doesn't resolve anytime soon, then there will start to be actual impacts from the lack of supplies. And that'll trickle down to inflation and ultimately interest rates at some point.
It's like the COVID toilet paper, isn't it? Everyone's just panic buying when they probably don't need to.
Yeah. Definitely reminds me of that. Yeah. It was really interesting, actually. I had a look into some of these things, right? Because the first thing that happens whenever some of these uncertainties occur, like COVID, for example, or in this case, the situation in Iran, is fear, right? You don't know what's going to happen. You don't know what is and isn't reality. And then you start to stress and panic. But obviously, we're all about property and all about real estate. So I went and did a bit of research in terms of what happens after some of these crises in the world. And interestingly enough, the last 5 major crises, right? And one of them is actually related to oils. In 73, there was an oil crisis. In 87, the so-called Black Monday, the dot-com bubble, and then the GFC, and more recently, COVID. The real estate market in Australia actually went up anywhere between 30 to 80% in the 3 years straight after those crises, right? So from a property point of view, who knows what's going to happen in the future? We don't have a crystal ball. If you look historically, yes, there may be a little bit of a slowdown. Yes, we may have some interest rate increases, etc. But straight after that, the subsequent 3 years have always been very strong historically.
Be interesting to see if it happens again. It'd be interesting to see what happens if you have a correction.
Yeah, absolutely.
For sure. On another topic, how's the market going down in Brizzy at the moment, Nick? Yeah,
it's we've been involved in my favourite part of the game, the multiple offer situation, a couple of times in the last week, which sort of the bane of my existence. I don't think it's the best way to conduct a sale, but it was probably a good example of what having a buyer's agent on your side can do. We missed out, but then through persistence, the agent went and found us basically the identical property in the same building. So we managed to secure that. So, while every time I see a multiple offer, it's sort of a shiver goes down my spine. It did turn out the right way in the end, but activity is still really strong. Certainly no sign of slowing down at this stage. I think I saw the other day, prices are going up on average $5,000 a week in Brisbane, which is pretty frantic growth. Interestingly, Ray White Collective, who do a big monthly auction in rooms, have got the big one tomorrow. They've got a number of prestige properties there, $5, $10, even $15 million range sort of thing. So it'll be very interesting to see how they go. We do like to try and pop into those auctions because it gives you a good idea of what's going on in the market, just how vibrant it is, how many bidders are registered, and just you get a good feel for what the feeling is like there. So we'll get someone to pop out tomorrow and just have a bit of a look at it for a couple of hours and just see what's going on, because there seems to be at the moment a disproportionate shortage of prestige properties in Brisbane compared to Melbourne and Sydney. When you look at stats from last year, we were very strong in the prestige market, and we still are, but we just don't have the stock available. Talking to the agents in that realm that work in that sphere, and there's not many of them, they believe that's starting to turn. There's going to be more stock available, but these ones that are coming up tomorrow will be a good indication of just how strong that market is.
Yeah, it'll be interesting to see for sure. And coming back to that multiple offer scenario, obviously we have to deal with it often, and sometimes people are just willing to pay way more than something is worth at the end of the day, and you can't really compete with it, right? So it was a good outcome in the end.
It was a good outcome. It sort of was a good indication too that you do your market analysis like we do, and we're really confident in what we present, but it only takes one person to come in with something that is out of the ballpark, and then it can just blow you out of the water. But also that's not a bad thing, because I think, there's plenty of people out there overpaying at the moment just because of FOMO and things like that. I think I've got to go and buy it. A little bit's okay, but to the extent we saw this week, it's going to take a while to recover that.
For sure. And the other thing that we saw during the week in Brisbane was there was some reporting coming out about the sub $1 million market in Brizzy and the first home buyers coming in. As we know, the first home buyer incentives pushed out to anyone buying up to $1 million. Hugo, you were reading a bit about that, weren't you?
Yeah, it was really interesting. It wasn't surprising given what we see out the biggest increase in prices compared to the other three quartiles, and the lowest increase was at the top quartile. So that's really where all the demand is concentrated, in that sub $1 million mark. Interestingly as well, and related to it, it's the first homeowners, but it's a lot of investors as well, right? I was looking at some data for the December quarter, and investment loans made up almost 40% of all loans. That's the highest they've been in the last 9 years. So there's definitely, to Nick's point, a lot of activity still happening there. No signs of things slowing down, and sort of that perfect storm of having your investors and your first homeowners all vying for that bottom quartile of the market.
Yeah, it's interesting. I think it's making it harder for investors who are looking to be quite aggressive with their yield on the properties they're buying, because the actual price of the property is accelerating quicker than the rents are. Because obviously with rental rules, you can only put them up at a certain rate at a certain time, whereas the property prices are just getting away from the rental figures. So that's something that's going to be difficult to balance over the next year or so, I think, for investors.
Definitely with all the first home buyers coming in the market, and that being the real fuel for the market. Interestingly, a little while ago when they bought in those first home buyer incentives in October or whatever it was last year, it was interesting to see borrowing applications going up significantly. But at the same time, the stock shortages were so low that the volume of transactions to first home buyers went down.
Yeah.
I know borrowing for first home buyers is up at the moment with the applications. I'm not too sure what the volume of transactions is happening in that space at the moment, but that's definitely causing the increase in prices, sub $1 million for sure.
Mm. Yeah, it's
read another report during the week that investor lending's up 40% from 5 years ago. Did you see that?
Yeah.
That's look. Yeah. It's a big number.
It's certainly.
Go, Hugo.
No, I was just going to say like I was saying before. It's certainly a perfect storm, right? Everyone's vying for the same piece of the market, and we know supply is low as well. So it's bound to continue for the foreseeable future, I think.
Yeah, for sure. What else is happening in the investment space, Hugo?
I was really excited this week when I saw some news about the size of the Australian real estate market, to be honest. It's hard to fathom. I know we were talking about this recently in terms of actually wrapping our heads around numbers that have lots of zeros in front of them. But the Australian real estate market's been valued at $12.3 trillion. So first time that's over 12 trillion. Continues to grow, obviously, but when you try and actually understand what that means, that's actually more than all of Australia's GDP, which is just incredible. Again, a testament to the strength and the resilience and the robustness of our real estate market, but the numbers are just astronomical.
I don't even know what that looks like. 12.3. I mean,
no, I agree.
Yeah. That's a number that's a bit beyond me. You see the numbers when they pile up all the money. That's $1 million, that's $1 billion. What does 12.3 trillion look like? It's a football field full of money.
Cut that out. And we've also got a road trip next week, Hugo. That's going to be fun. It's going to be interesting. We're going to a new market that we haven't been buying in a lot, but we're going to go to. It's a major market in another part of the country. to see if we can source a few more markets for us to get into with our investor clients. Are you looking forward to that?
Absolutely, mate. Absolutely. It's really exciting when, thanks to our research and looking at the data, et cetera, we start to identify areas before they actually take off. And I really think this is one of them. So it's a mystery market at the moment, but we're going to make sure we immerse ourselves in it and understand it inside out before potentially moving there for our clients as well. But it's got all the fundamentals and all the signs that it is about to really take off. So really exciting.
Yeah, that'd be fun.
Yeah.
Noosa, Sunshine Coast Market, where I am, it's been a very eventful last few weeks. We've got a few properties bought for clients. We've got a few new clients come on. General talk is that its market's going to start to pick up a little bit with more stock come on the market. That has been the issue in the past. Probably something that's interesting to mention about our markets is there still seems to be quite a gap between the prices that the sellers' expectations are at and the price that the buyers are willing to buy for. It's not often that a property's hitting the market through Noosa and selling for the asking price straight away. It's generally either coming on really well priced and going, or it's having to sit on the market for a little while. So a little bit of probably a window of opportunity for people at the moment. And we're looking at some good opportunities for clients through here at the moment. Not sure how long it's going to go for. Once stock starts coming into the market, it may sell, it may not. We'll have to wait and see.
What's Noosa like historically over Easter, Jace? Because you're going to get a lot of southern visitors, that sort of thing, hit Noosa for those holidays. Does that make a difference?
It does make a difference in activity. So, through those holiday seasons, Christmas is similar. You get a lot of people coming here and a lot of people inspecting properties, a lot of people calling agents, and a lot of the selling agents are quite busy through those times. A lot of the selling agents try and take time off outside those holiday periods. But when we have a look at the data, it's not always a case that a lot of properties sell through those periods. So lots of activity, lots of inquiry for the selling agents, but not necessarily translating into transactions. I know Christmas activity was up, transactions were down, just gone. It'll be interesting to see what happens in Easter this year. It's probably going to be the same. Lots of activity and possibly not many transactions happening, but wait and see.
Does it sow the seed for them to come back and purchase, so you think? They get up there, have a look around, think, okay, I can live here, had a look at the market, and then maybe come back to it in a few months' time once they're ready?
Yeah, definitely does. We don't generally have as much stock on the market over the Easter time up here compared to, say, spring. So it might be a case of, less stock on the market. They might get prepared for end of financial year, and coming into spring, they might gear up for making a purchase there. I'm not sure I've sort of made the correlation between the two that much in the past, but could be the thing that happens.
Yeah, okay, interesting. Sounds a bit like Groundhog Day, but it's just the market just continues to roll on. It's competitive. As I said before, like Brisbane house prices are, say, going up around $5,000 a week. So if you're taking 90 days to find a property now, you do the maths, you're getting further and further behind pretty quickly. So the best time to get into the market is now. Otherwise, it's just going to continue to accelerate away from you.
Yep. That'd be sort of properties up to the 1.5, I guess, the entry level type stuff.
Yeah, definitely. I mean, sort of sub 1.5 and under. They're the ones that are really getting the rapid growth. And it's just a simple supply and demand issue. There's just not enough out there, and there's too many people trying to buy them.
Yeah.
Yeah. Just on that as well, Jason, it just reminded me of something we were talking about this week. You would have seen some of the revised forecasts for the various markets across Australia, and some of them have turned negative, and the forecasts are now, because of obviously what we discussed earlier in terms of inflation, interest rates, etc. And it just really highlights once again how important it is to not be guided by hype or what's on the news or what's being talked about the most, etc. That doesn't necessarily always mean that is the right investment market to go into. And just the importance of, I guess, getting someone like us in the Good Buyers Agent that's always in all of those markets and aware of what is and isn't happening. And so you're not reacting to things that happen across the world that might have an impact on it. You have a strategy and you're sticking to it. And it's really just reinforced that to me.
Well, that's some of those markets that people have been jumping into a little bit prematurely. It looks like they're tipped to come down a little bit this year. So it'll be interesting to see what happens. We've kind of stayed out of those markets and tried to keep to the ones that have traditionally been really strong.
Yeah.
Yeah, it'll be interesting to see how the year pans out. And as you mentioned, with the different, economic crises over the years that we've had, when those crises happen, generally there's a bit of a correction. We're not sure how much of a correction we're going to have. The longer this war goes on for, probably the bigger the correction's going to be and the longer it's going to last for. And I do think that in the investment space and what we do for our clients, we're going to hopefully have some really good, more really good options this year than we have in the last couple of years in such competitive markets. So we'll be certainly keeping a really close eye on what's going on with the markets and making sure we're taking advantage of it. Because like history tells us, potentially there's going to be a bit of a correction, and then straight after the correction, good chance it's going to come back up to where it was and surpass it. So interesting to see how that all pans out and trying to make sure we position our clients to take advantage of it for sure.
I was just going to say, it's all down to this road trip, guys. You've got to pressure's on. And find us the next really good area that we can get our investors into. In the area we're in at the moment, it's very competitive. And so if we can get ahead of the game, that'd be fantastic.
Yeah, could well be, mate. Could well be, mate. And it all comes down to just ensuring the right fundamentals. Like what you were just saying, Jason, is spot on. The biggest impacts when there are corrections are to those areas that are all investor led, right? Those areas that are hyped up and all the investors flock in. What happens with a correction? The first ones that need to jump out are the investors. They're not living in those properties, so it's easy to make that decision, right?
Mm-hmm.
Those owner-occupier-led areas, they're the strong ones because they're not all just going to pack up and move regardless of what's happening with interest rates or anything else. So sticking with the fundamentals, mate, we always keep saying it, and it's so important.
Yeah. And just to add to that, obviously we always see property as a long-term investment. It's a long-term strategy. It's, what's the property going to be worth in 15 or 20 years' time? And, we've always traditionally said it's not timing the market, it's time in the market. However, I've personally seen in my investing career a bunch of times when the market has been really ready to buy because people are hesitating, and I've jumped in and other people have jumped in at the right time. So if you can coordinate it with a long-term strategy, but also jump in at the right time, you can be even more successful. So it'd be interesting to see what pans out, what opportunities we get this year.
Yeah, for sure.
Absolutely.
Cool. Well, enjoy the rest of your Friday the 13th.
Yeah. Didn't even know.
Hopefully it's a lucky one.
Yeah.
Hopefully it's a lucky one.
Thanks, guys.
All right. Great catching up again.
All right, boys.
Thanks, guys.
Talk
See
to
ya.
you. All right.